The following programming is sponsored by Mark J. Bernstein. The views expressed do not necessarily reflect the views of this station, its management, or Beasley Media Group. Entrepreneur, founder, author, and financial advisor Mark Bernstein helps high-performing business owners turn their visions into reality. Through his innovative work and the Forward Focus Forums, Mark connects entrepreneurs to resources that fuel their success. Founders Forum is a radio show and podcast where entrepreneurs share their journeys, revealing the lessons they've learned and the stories behind their success. Join Mark and his guests for a mix of inspiration, valuable insights, and a little fun. Now, let's dive in.
Good morning, America. How are you today? It's another gloomy, rainy day, spring day in Philadelphia, but we're happy inside the studio here at WWDB. And you may be listening to us on podcast, and wherever you are, hope you're having a great day. We're in the studio today with Armon, who was a guest on our last show, who's serving as co-host of this show, and Gary, and I will formally introduce both of them in a little bit. But we always start with a topic of the day, and I was thinking this morning about questions because I've been, whatever you do in business, the questions you ask are important, especially if you're in sales, but in any kind of people-to-people business, questions are very important. And I've been working a lot on the last few years in terms of thinking about powerful questions, like how do you really get to know somebody? There's a book by David Brooks that's out now, and I think it's called something like How Do You Really Get to Know Someone or something like that. He's a journalist and he's a commentator on television, and it's a very interesting book, and he talks about the questions he asks. So my question for our guests today is, what is your favorite question? So I'll start with you, Armon, because I know you have one.
So whenever I'm speaking to a client, a prospect, the first question I really lean on is what matters most within the context of what we're discussing, of course. But once they give me an answer, then I use the standard 5 whys to dig in deeper. And they give me an answer, and I try and go as far into that as I possibly can until I get to really what I think is the kernel of truth, or the pea underneath the mattresses, if you will, to really understand how the person's truly thinking about something.
Do you ever get lost counting the whys? Because I know I've done that.
Yes.
If it's a really good conversation, you get lost.
Yeah, absolutely.
But I love that question. And also, if you get really deep, we've talked about this a little bit because the last show we talked about boundaries. And the problem with the whys, especially in a business context, is you can start to tread on boundaries when you do that. Right?
Absolutely. It can cross over into the personal, and you have to try and artfully arrange it so that doesn't happen, and kind of pull up, if you will. Gotcha.
So that's just an observation. Gary, how about you?
It's a great one, and I think it's an interesting one to ask yourself. I think for me, I'm not necessarily in sales, so I'm not trying to sell when I meet with people or I'm connecting with people. I think my biggest question is what motivates you? And a lot of people phrase it to me as like, what gets you out of bed in the morning?
Right.
Right. Why do you do what you do, and what motivates you to be either successful or motivates you to get things done that day? And to me, that's a deep question. You can really probe into somebody's history. You can probe into somebody's, inner feelings and things like that. So to me, when anyone asks me that question, it always gives me a good opportunity to explain sort of my perspective on things. And so I like answering that question.
So what matters most and what motivates you? 2 very powerful questions, I think. I think those are really good choices. Mine, and I've used something like those as well, but one of my favorite questions that I don't always remember to ask, but I'm trying to remember to do it, is after a series of questions and after a whole conversation, what other question didn't I ask that I should have asked you? Let them provide me with the question. And I often get one. And when I don't, it means that we probably had a pretty complete conversation. So I like that one as well. So we have Armon Vincent, did it again, who is He is founding partner at Catalyst Technology Partners, and please listen to his podcast if you haven't already. And we have Gary Brandeis, who's our guest today, and he's CEO of Scholar Hotels, LLC. He started his real estate career in 1990, and his experience and expertise includes development, finance, acquisitions, dispositions, asset management, and joint ventures. He's been the principal partner in 4 real estate investment funds, including PB Funds 1 and 2, investing over $350 million in all property types and investment strategies since 2005. So welcome, Gary.
Thank you, Mark.
So as I always like to start, tell me about how because you have a finance background, right?
Accounting. So
Accounting,
I decided that accounting was the best sort of college education I could get. Wasn't necessarily sure what I wanted to do with my life when I started college, but I knew that I was going to be in some sort of business. And, people kept telling me accounting is the language of business. So learn accounting and you can do lots of different things from that. And it was actually a really good choice for me.
Right.
Yeah.
And what were your first? But you had some jobs outside of straight accounting pretty early on, I think, too.
Yeah. So I started working when I was a young teenager. I was fortunate that my grandparents had a home in Atlantic City, so I got to spend the summers with them as a teenager, working at various not so great restaurants on the boardwalk in Atlantic City. Pizza shops, ice cream stands, all-you-can-eat smorgasbords and things like that. Right. So I think I got my first work experiences as a pot washer, a busboy, right. a short order cook, and things like that. And It's funny how my career circled back to hospitality, but that's really where I started. I made the minimum wage at the time and worked really hard, but got some good experience. So,
and you mentioned just a little while ago you worked for a radio station. Or it was
well, I had the opportunity to.
I had the opportunity to. Yeah,
I chose not.
Gotcha.
I chose to stay in the real estate business, which may have been a good decision or not so good decision, depending on how you look at it.
So, how did you get from accounting to entrepreneur, which is really the story?
So, I graduated from Penn State with an accounting degree and had the opportunity to work at one of the big accounting firms, global accounting firms. There were 8 at the time. Now there's 4, right. But I worked for one of the 8. Price Waterhouse was the one I worked for. And the great thing about starting in public accounting is, you're a client-based service provider. So in the 2.5 years I was there, I got to see all types of industries. So I was doing accounting, auditing, and tax work for manufacturing clients, real estate clients, banking clients, technology clients. So I got to see probably 6 or 7 different types of industries where I may have been there for a few weeks or maybe even a few months, depending on the size of the client. So after my 2.5 years or so at Price Waterhouse, I really sort of looked at the gamut of different industries I got to work in, and real estate of all of them really resonated with me the most. And it made sense to me. I liked the people that were in that business that I got to interact with, and so I gravitated toward that industry. And I think the reason it resonated with me was really twofold. One, it was relatively easy to understand, right? You collect rents from somebody, and then you pay your bills and you have a profit or not afterwards.
And it's something you can touch, bricks and sticks.
And that was the second thing, right? So it was a physical business, right? It wasn't software or technology or banking, which is somewhat abstract, right? Now you can touch money, but you get pretty far away from that physical contact as you get into banking. So for me, I love the idea of a financial-oriented business, but a physical asset business. And I like those things combined together.
Right.
And that's really what sort of drove me to that part of the business.
So you started getting into real estate within PwC, I guess.
Well, so I started to get more real estate clients because I asked for them.
Yep.
And so I was doing accounting and auditing and tax work for some of the bigger real estate companies here in Philadelphia because I was in the Philadelphia office of PW and got to see some really interesting things.
Before the C, I forgot. I keep saying PwC.
But no C.
Right.
Yeah. So I really liked it. And then after I passed the CPA exam and had my required work experience, I decided that I wanted to go into the real estate business and ended up getting a great opportunity to move to the Washington, D.C. area and took a job as a controller in a real estate developer and really started from the ground up. So I was doing property management accounting, construction accounting, and things like that. Not very glamorous, not very exciting, but I would tell you now as I look back on that, it gave me an amazing base of knowledge, right?
I'll bet.
If you can do the accounting for a construction project or do the accounting on the management of office buildings and industrial warehouse buildings. You really understand the business from the ground up. And I think that was really important for me.
And I think with what you're doing today, numbers and tracking your, occupancy and all that kind of stuff, and the financials are extremely important, I would think.
It's really important, right? What I say about our company is, our first job is to make a profit, right? We're not a non-for-profit. Right. We're not a charity, right? So our business is to make money for our investor partners, to make sure we can pay our mortgage and we can have a profitable business, right? So without a profit, we don't have a business. So my first job is to make a profit and provide a good return for our investor partners. My second job is to reinvest in our physical assets of the building and our people, and making sure that our buildings are well maintained or clean, they operate properly, and our guests can have a good experience in the physical building. And then if I can do that, then outside of investing our profits and cash into the building and our people, if we have something left over after that, then we can be a great community partner, right? We can invest in our community. We can sponsor charities. We can host events and give back to the community. So it kind of happens in that order. Yeah. But that's really important. That's how we focus our efforts.
So how did you get from PW? By the way, I went to high school at Plymouth Whitemarsh. So that was the other PW in the film. So that's why I tend to say PWC.
The acronyms can always make a mess of things.
Anyway, but how did you get from PW to what you're doing today, Scholar Hotels?
Yeah, so I started, I left PW, went to work for a big national real estate development company in the DC market, worked there for about a decade or so, and was able to start out as an accountant and then work my way up the chain, and I think I left my first stint as a vice president, and then I left for 3 years and then opened an office for that company here in Philadelphia, and then became an operating partner for the company, spent another 5 years with the firm, and then left and started the company I have now back in 2005. So we're going to have our 20th anniversary this summer of when we started the company.
Congratulations.
Thank you.
Cool.
So but really we are, the company I have today and we started 20 years ago, is we're an owner-operator, which means we're a vertically integrated real estate company. So we raise capital, we invest that capital, and investing it in acquisitions, obviously buying existing assets or building new assets. But we do the development, we do the construction, we do the capital and the financing of those assets. And then once we're done, then we operate it. And so about 15 years ago, we really pivoted toward hospitality. One, because there was a lot of opportunity that we were seeing in hospitality.
What were you doing prior to that?
Mostly office and industrial development.
Gotcha, yep.
And that's what my training was when I worked for the national development firm. And so we really pivoted toward hospitality because, one, there were opportunities in the market for that type of asset class. And after we bought our first hotel, I really fell in love with the fact that, one, I was able to continue to do the things I always did in real estate, which was the physical aspect of the building, the financing and the capital raising around the physical building. But instead of just trying to lease space to other people and sign long-term contracts or long-term leases, we actually had an operating business that was attached to our real estate. And so we were selling rooms, we were selling conference and meeting space, we were selling bottles of water and potato chips at the front desk. We were hiring people in management and sales and operations. So in addition to doing all the really things I liked in the real estate space, we actually got to run a real business as well. And to me, that was a completely different dynamic than the other real estate classes.
I remember this right? Are you also a little bit in the restaurant business here and there
sure.
too? I thought you were too.
I mean, a lot of our hotels have full service food and beverage outlets. Yeah. And we're also in the wedding business and corporate meetings business. So we do all those things. Right. But I still get to be a real estate developer at the same time.
Interesting.
Yeah.
Do you have to be a jack of all trades? Because those are a lot of different businesses.
You really do. For me, I do. Now, I have specialists in the company that are real specialists in, let's say, revenue management and sales and marketing and chief engineers of our building that maintain our physical assets as well. For me, it's about knowing a little bit about a lot of things. And for me, and I teach a class in real estate development, you have to do three things really well in real estate. One, you have to be able to crunch the numbers and do the analysis and look at the returns. Two, you have to be able to do a market analysis and understand what the market is driving towards your building. And then three, you have to under the physical part of the building.
It's time for a break right now, so we're going to take a quick break, and then Armon has a question for you.
Are you a discerning homeowner in southeastern Pennsylvania looking to transform your house to suit your family and lifestyle? Check out Gaiman Design Remodeling. Since 1990, Gaiman Design Remodeling has been the go-to choice for exceptional home transformations. Led by Dennis Gaiman and his talented sons, master-certified kitchen and bath remodelers, we bring expertise and passion to every project. Our in-house team of designers and tradesmen treat your home like it's our own, ensuring a personal touch from design through construction. With 3D design software, we'll show you the final look of your home before we even start. Experience the Gaiman Design Remodeling difference. Call 215-513-0300 today to schedule your consultation. That's 215-513-0300 or online at GaimanRemodeling.com. Let us turn your vision into reality.
We're back here on Founders Forum, and Armon Vincent, take it away.
Thank you. So I'm always fascinated by how entrepreneurs become entrepreneurs. What did that leap look like for you?
I think it was a long lead up to that leap, right? I always knew that I wanted to be an entrepreneur and have my own business, and I just happened to be in the real estate business from my training and the jobs I've had. And so I knew my leap was going to be in real estate. And I think in 2004, I had my second stint at the national firm with my office here in Philadelphia, and we had built a pretty successful local business. And that company in particular was, hey, here's a business card with our name on it, go make things happen. So I was kind of an entrepreneur in a way with a big national company behind me, which was really, really great because it gave me some good experience. But I had a lot of people behind me supporting me, in the corporate office with capital, with insurance, with financing and things like that. And so what happened was after we had sort of built up our portfolio here in Philly, I realized when I started to look at the P&L for our region, I was like, wow, we're making money. This is great. And then I realized how much of that money was actually going into my pocket, which wasn't that much, to be honest with you. And so I said, boy, I could do this myself, and all the money could go into my pocket, or most of it anyway. And so that was sort of the leap. And at the time, I was married, had 2 young kids, and sort of it was a tough leap because I had a lot of responsibility at home. Fortunately, at the time, my wife was working and had benefits, health insurance and stuff like that. That helped me. That gave me that additional sort of comfort to take the leap and to really try to go out on my own again. And I think a combination of a couple of those things really drove me to do it.
A follow-up to that I'd like to ask you is a lot of times Armon and I were talking, I'm not sure we talked about it on the show, but I said, who was your model for entrepreneur? He said, nobody. He said, I was always kind of independent. I always asked questions, and I always, I had to figure things out, and that made me entrepreneurial. Was there any blueprint that you had, or was this just something because you saw an opportunity, you took it?
I would tell you that's probably one of my biggest regrets, Mark. And when I look back on my career, that I didn't have a real mentor. I had a lot of great bosses, but they were my bosses in the company. So if I was a vice president, they were a senior vice president or something like that. And so I would tell you that I didn't necessarily have an entrepreneurial
You didn't
mentor.
have parents that were in business or anything like that? Or
No, not really. But actually, what I would say, and I've said this before publicly, and my father and I have had lots of conversations about it, but I think my father was a motivator for me to be an entrepreneur because, frankly, I saw him struggle throughout his career to find a place or to find a company or to figure out what he could do to be successful. And I think he found some avenues for that, but not something on a long-term scale. And I think in seeing him with his career and struggle at different times of his life, I knew that I didn't want to do that. And so that was also a motivator for me.
So like a lot of entrepreneurs, it was a way to control your destiny.
Yes. And so one of my biggest fears was I don't want to be a 55-year-old guy who gets laid off from his job.
Right.
And what do you do next?
Right.
And so I didn't want that to happen to me. And I saw it happen to other people, older people than I was at the time. And I felt that I never thought I was going to be the smartest guy in the room, but I thought that I could outwork people and outwit people in a way and find opportunities where others didn't or hadn't before. And that's sort of I think if you look at our company and the successes we've had, I think that's probably where I would point my finger to most. Hard work and finding opportunities that others don't want to do or don't see.
So it's interesting because and fear was a motivator to a certain extent, which for a lot of people it is. A lot of people become entrepreneurs for all different reasons, and it's fascinating to me. I always enjoy hearing about that. So I'm glad, Armon, you asked the question. What kind of challenges do you have to deal with in your business? And I know financial times are one of them. I know in recessions, as an example, we've talked about.
So we have two primary, our business is really broken up into two buckets. One is the real estate bucket, right? The building, the capital, the equity, the debt, right? And then we have the operating part of our business on the hospitality side. So that's hundreds of employees, sales, marketing, what kind of benefits do our employees get? How can we control those costs? All those types of things. So the risks and the challenges are a little bit different in both. So on the capital side, it's interest rates, right? Are the capital markets frothy or thin, right? Is it easy to get capital both from equity and debt? Are lenders lending, or are they really pulling back? So those
that's where the economy has a big impact.
Definitely, the economy impacts everything, but in the capital markets is really sort of the real estate side of the risk. Yeah. And right now it's been challenging because for many years we were paying 2% and 3% on our debt. Now we're paying 7-8% on our debt. So even though the properties are performing really well, most of our properties are performing well, a lot of the free cash flow is getting eaten up by interest costs, whereas before it wasn't. So I think on the real estate side, it's mostly capital markets that really drive the risk, and that's economically driven by the Fed and other things that are happening in the world. On the operating side of our hotel, the challenges also are impacted by the economy, right? We're in the hotel business, we're in hospitality, so people are, if they're traveling for leisure, it's disposable income, and where should I spend that money? Corporate travel also, right? Are people traveling for work? If they are, great. If they're not, obviously what's happened post-COVID with Zoom and Teams, a lot of things can happen without face-to-face travel. So the other things that impact us on the operating side are access to staff and employees, right?
Sure.
The employee markets are pretty thin. It's hard to find people, right? And providing good benefits and providing the things that people need to sustain themselves. Those things are becoming more and more expensive. So the challenges are different, and then, and they're combined with each other.
So, by the way, I should mention the name of your company is called Scholar Hotels, and we didn't talk about why it's called that. Let's talk about that for a second.
So
and how that impacts, because it puts you in a slightly different market.
It does. And I think, when you look at the commercial real estate landscape, hotels have historically been considered the most risky type of investment, because there's 5 types of real estate, commercial real estate classes. So you have office, office, industrial, multifamily apartments, retail, and hotel. And so 4 out of the 5 categories get their revenue from contracts or leases, right? So you sign a lease and you know what you're going to get for the next year, 2 years, 5 years, even 10, 15 years. In the hotel business, we essentially get a 1-night lease or a 2-night lease, right? Sure. It's a little bit of a wacky acronym or cliche a bit, but
create more volatility.
A lot of volatility. If I have a 100-room hotel, I have to sell 100 rooms every night, and so traditionally it's been considered the most risky. Not as many people go into it, and then the operating business on top of it makes it even a little bit more risky, right? And so we looked at that business and said, well, how can we mitigate that risk? How can we reduce the risk? And so at the end of the day, if your property is in close proximity to a big demand generator, something that creates consistent and reliable demand for your hotel, then boy, that's a way to mitigate risk and reduce the ups and downs of the sales cycle. And so as a Penn State grad and spent time in Happy Valley, that was a market that was starving for more hotels and hotel rooms. And so we took the leap and built a ground-up $55 million development right in the downtown area across the street from campus. And we opened that hotel in March of 2017. And boy, the impact of being next to a $10 billion public university hit us square in the head and said, wow, there's business. I mean, the business was crazy consistent. We were really busy at certain times of the year. But even when
I was going to say it's a little seasonal, right?
A little bit, but less than you think, right? Yeah. When you have a major public university that has 50,000 students, 1,000 clubs and organizations, Division I athletics, research and development, that particular market,
all kinds of people visiting all the time.
All kinds, and I would tell you, if you look at any large public university in a small town, which is what that is, it's one of the most unique markets in the country. There's only 10 of them that you can really point to that have the same sort of demographic of small town with big public university. It's a great opportunity. So we ended up investing a lot of money and really sort of doubled down multiple times in that market to build a portfolio there that has a lot of staying power.
Specifically in State College.
Correct. But we have hotels in other college markets. But our goal is to own hotels and operate hotels that are in very close proximity to major colleges and universities because, one, we think it's just a good business idea, but it also mitigates a lot of risk. And we think because of the consistent and reliable revenue streams we get out of the university that our hotels are worth more than a traditional hotel, meaning our income is more valuable than income from a traditional hotel.
Well, if you look at your cap rates, right, I would think they're going to be higher, right?
Well, they're going to be lower.
Or lower, I mean.
Yeah,
lower,
and that's the
right,
exact
right.
business model. So if I've got $10 million of income or net income
Yep.
from my hotel portfolio, and they're all supported by major college universities, and you have another $10 million of income from another hotel portfolio that's hotels randomly, spaced out in a few major markets, a few at the airport, a few downtown, a few in the suburbs, I would make a bet that my income is more valuable by anywhere from 100 to 150 basis points.
So is that your when you look at your forward focus, is that going to be the focus going forward?
It's definitely part of it.
Yep.
Yeah. And again, that's what the real estate side of the business is all about, right? Consistent and reliable income that drives cap rates. Cap rates are risk, right? Lower risk, lower cap rates. So if there's lower risk in my revenue models, then I deserve a lower cap rate.
I'm going to ask you about challenges, but you've talked a lot about the challenges as we've gone along. Let me ask you this. If this were 3 years from today, Gary, and you're looking back at the last 3 years, what would have to happen for you and I, if we're sitting there talking about it, for you to feel that was a successful 3-year period in your business and your life, if you'd like?
So what we're trying to do now, Mark, is we're trying to take our university hotels, because we believe that those types of assets are what we call generational type assets, meaning – Penn State, as an example, isn't going to go out of business. The main campus, right? And that's topical for today. But it's going to continue to grow, and someone's not going to move the main campus to somewhere else. So we believe that having these assets in close proximity to this large public university, these are generational assets. So my goal over the next few years is to shift the capital structure of these assets out of sort of a traditional investor model and put it into what I call a perpetual capital bucket, so that my company and myself can own these assets for a long, long period of time.
Yeah.
And so shifting from, real estate investment funds with investor partners, family offices, high net worth individuals, things like that, to more of a retail investor model where I can have larger number of smaller investors that know that they're going to be in these deals for a really, really long time.
Nice.
That's sort of my plan for the next 3 years.
Of course, I will have to ask you offline because we're out of time. But who continues to run that? Your succession plan, for perpetual business.
Exactly. So as I get older, I'm looking for that. What happens next, and who's going to be running the company, and who's going to benefit from it?
Exactly. Well, unfortunately, I think that's all we have time for today. So I was going to ask you about legacy, but you just talked about it to a certain extent. So. But we thank you all for being here this week on Founders Forum. And Gary, thanks for being here. Armon, thanks for being here. And thank you, Eric, for engineering. And we'll see you all next week.